Hello everyone, this is Marshall Gittler, Head of Investment Research here at FXPRIMUS, bringing you my North American opening market comment for Tuesday, August 30th. It's been another quiet summer morning in Europe today. The dollar is generally higher, particularly against the Australian dollar, New Zealand dollar, and the yen. I think it's because the market's waiting to hear Fed Vice Chair Stanley Fischer on Bloomberg TV this afternoon. It was his comments, more than Fed Chair Yellen's, that got the market excited at the Jackson Hole Symposium. He was much more direct and much more forthcoming about the possible timing of the next rate hike than she was. Investors will want to hear what he has to say now that he's seen the market's reaction to his initial comments, what's called reflexivity. Will he press the point even more in the belief that the market still doesn't believe him? Or is he going to back off a bit from his rather aggressive statements? Personally, I expect him to double down on his commitments and for the dollar to move higher as a result. As for the indicators, the Conference Board's Consumer Confidence Index for August is expected to be down slightly. The U of Michigan's Consumer Confidence Index also fell slightly in August, but as the graph shows, that gives us little information about what the Conference Board's index is likely to do. I don't think a decline of the size that the market is looking for is likely to be market affecting, however. Then overnight, we get the GfK UK Consumer Confidence Index for August. Now, normally, I don't even mention this indicator as it usually isn't market affecting. But nowadays, with investors looking for any idea at all about what's going on in Britain, this indicator may attract more attention than usual. In July, it plunged the most in over 26 years, so a slight recovery is expected for August. That could be positive for the pound. Japan announces its industrial production data tonight, or overnight in Japan time. The market focuses on the month-to-month rate of change, which is expected to be higher. Now, the FX market reaction to this indicator is not what you'd usually expect. In fact, dollar-yen tends to fall, in other words, the yen tends to strengthen when the figures disappoint. It looks like the IP data affects the stock market, and the stock market in turn moves the FX market. So a fall in Japanese stocks would usually mean a fall in dollar-yen. This, of course, refers to the difference between the expectations and the actual figure, not whether the output, industrial output is up or down. Finally, early Wednesday, we get the UK House Price Index from the Nationwide Building Society. It's expected to show a small fall from the previous month, which could be negative for the pound. This is Marshall Gittler, Head of Investment Research at FXPRIMUS. Get more market insights on our education pages and turn your trading ideas into action with FXPRIMUS, the safest place to trade.